All right, so today I have on with me Mr. Vinnie Fisher, okay, and who has an amazing accounting, outsourcing, CFO, financial wizard slash guru slash finance person for entrepreneurs on. So welcome to the show.
Aaron, thanks for having me, buddy.
Awesome. So I guess first, the first thing, could you explain, what you do and give me the story of like how you got into this business that you're in. I know finance is one of the most lucrative, and obviously because it deals with money, like money makes money. It's kind of like a thing. But how'd you end up in this field?
Yeah. So, I am not, so the service we provide is a fractional CFO and controller service. We run the entire back office for e-commerce companies doing at least 7 figures of annual revenue, right? And so how I got into this space, I'm not one of the...
Hold on, before. Could you explain this fractional CFO? Because I think people might be like, what is this fractional CFO before you get into the whole deal?
Yeah, so I was, yep. So think of it, you buy a piece, right? So our motto is time, money, and resources. So a fraction is a fraction of the amount of time you'd have to spend to have a CFO full-time on your team. You get that expert, all of the resources that he or she brings to the table, and you pay a fraction of the cost that you would otherwise pay to have a full-time CFO on your team.
Okay. So like, let's say instead of 40 hours a week, you could hire him for 10 hours a week. Is that what that basically means?
That's right.
Okay, cool. So then, go ahead. You're going to say how you
so, I built this to solve a problem that I had in, as a leader of a business. I lacked a little of financial knowledge. I also am a good marketer and salesperson, so I would be good at making an offer or selling a product, but I never really had a relationship to the profit margin or the bottom line of the company. I cared more about gross revenue than I did about net revenue. Mm-hmm. And so what would happen is I'd grow up these big companies and break them because I wasn't really had a relationship to the bottom line. And so 2014, that all changed for me, where kind of a light bulb moment went on after breaking another 8-figure business that I wanted to do.
How big 8 figures? How big?
I had it going at just a hair over $4 million a month.
Okay. Wow. And what kind of company was that?
So that one was a health supplement company. We sold mass market health supplements.
E-commerce or retail?
What's that?
E-commerce or retail?
Both. Actually, one of our face creams got into a retail establishment, Purabella. So it had a good run for women. Our demographic was 35 to 55. And so the face cream had a good run for like a 45-year-old woman. That was one of the key attributes to selling the business when we sold it. It was called Consumer's Choice. But in the middle of all that, to be real, we were doing north of $3 million in revenue, and I had about 8% profit margin. We were razor thin. When we actually got done and really started paying attention to the bottom line and fixing our leaky bucket, we were actually at a 22% profit margin.
Wow. So that's a triple. You tripled actually what your take home, which clearly is obviously a very important, if not the most important metric. Yeah, and when you said you ran it to the ground, it doesn't sound like you ran it to the ground. It sounds like you there was no running to the ground. You ended up selling that business?
Yeah, we sold it. Now, I did actually, if I didn't invest some of our own money back at that stage where we ran tight on acquiring the customer, so I bailed us out. And if I didn't do that, I would have run that thing into the ground.
Okay. So theory, but you did it. Although it was razor thin, not comfortable 8%. I've been around that area. It's not comfortable. But you were able to triple, which is more obviously clearly. So how long did it take you to go from that 8% to like the 22% margin after you bailed it out?
About 9 months.
9 months. Wow. That is brilliant. And you were already at that like 40 million range.
Yeah, we were doing about 3.5 a month, and when we capped out, we were at about 4.7 a month.
Wow. That's absolutely fantastic. So, wow. And so then after that, you sold it, I'm assuming, for a decent amount. This company that size sells really well, or did you sell?
We did pretty good. We took some hits because I'm a direct to consumer guy, so I didn't care so much about the brand. My offers could have been a little tighter in the sense of what corporate branding likes. I could have been a little bit better the way we ran our merchant processing, the way I built our VSL style offer pages. I cared more about getting the first customer than I did about keeping them. There were things I took hits in our valuation too, but overall, yeah, it was a good deal.
Okay, sweet. So then after that, you decided, okay, mail us money in the consumer, like selling to the consumer, doing the brand. And what made you just want to say like, okay, let's switch models entirely after, having such a success and you wanted to switch to something else?
Quite honestly, Aaron, it was value proposition. To me, I didn't have a problem with the efficacy of what we're doing. I love the health business. But when we solved our own problem, we started actually a few of our friends in the space were like, hey, what is it you guys are doing? And next thing you knew, we knew we had something and we started doing it for a few friends in the space and before we even named it. And I remember just naming it from the car. Hey, I think we got something here. Let's do something with this. And so even though I knew it was going to be harder to grow and it was going to take a longer process to growing it, we're at the time meeting a need in the marketplace.
Mm-hmm.
And so I felt compelled to do it. In some point you go up against the struggle of success versus significance in everyone's life. And so I'm thankful.
Meaning dollars or value? Is that what you mean?
Yeah, both, right? Both. In some cases, like I already had some zeros and commas in my life. And so what's really going to equate to some of the value propositions that one, I have, and two, I offer to other people. And so, I believe, and I'm thankful for this journey, but I believe that the value proposition of what you offer to your prospective consumer is what leads to profit and ultimate value of your company. And so we started down the road of this service, which service businesses are stupid hard to grow and scale. And my product businesses were way easier to grow and scale. May not have been easier to keep the money, but they were way easier to grow and scale. And so we took on the hard work. I'm thankful to have teams that do that work. And I love that we have a COO and a whole staff. And so now it's way harder to break than it would be my product company. I'll be real there. Way easier to break a product company at any size or scale than it is to really break a service company with hundreds of customers and hundreds of companies that rely on you every day to do what you do.
Great. And so what when you're saying, they rely on you, like what kind of retention, or like when people come on and hire your services, right? Hey, I want a CFO for X amount. Like what does that look like? When they hire you on, you're seeing a big change in the company and they keep you on for a long time?
Yeah. So the average, in the accounting industry, the average client stays 5 to 7 years, right? So we have some of the longest retention of everybody. Digital agencies would love to have something even within half of that as their idea of how long they keep a customer. But we have a less than 4% churn rate annualized, and that's pretty impressive for a growing company that focuses on our category, because lots of times e-commerce and digital companies tend to have maybe a little less seasoned professional. And that means there might be a little bit more volatility. So even a traditional accounting firm might have a little less churn, but they also don't really niche down and focus on this industry as their expertise.
Very interesting. Okay.
Yeah.
And so, could you, like, let's say our company, right?
Yeah.
Amazon, or just take any not run of the mill, whatever, special, amazing company, right? Private label guys. Let's say doing anywhere between, 2 million plus, could be 10 million, could be 5 million, 20 million, whatever. I have seen a lot of people don't understand, their P&L, right?
That's right.
What is like your profit and loss? Okay. So you have all this product, then there's the cost of goods. And like, how do you calculate cost of goods and the advertising, and where we're losing money, and we should put money here to make money. That's one of my most financial stable concepts. Okay. And that's where I think the CFO, or that role, that position, the finance director, whatever you want to call them, should be responsible for making more money. So it's like, this is just a concept I have, and I don't know.
No, actually, the only thing I would say to you is, Aaron, I liked everything you just said there. our CFOs, and I believe this is true business-wise, our CFOs shouldn't be responsible for making more money, but they're certainly responsible for making sure we keep more money.
Okay. Okay. Good. So that's that concept. And so, and me, I know in where you want to put your money. Let's say as a CEO, or even let's put it that way, the ownership of the money. When your money is making more money, that is obviously the best thing, right? When your money will be put to a use where it's going to give you a big return. Now, that's just that's me. Like if I want to know where I need to spend money, it's not about where's the biggest noise. It's what is going to make the company more money. Let's say new products, if it's new, whatever. Anyway, so that's just a concept I have. Now, whether that's the CFO role, or that's the CEO role, or whatever, I'm just sharing with you my idea.
I like it. I don't disagree with any of that.
Yep. And understanding the P&L, it's good to know, like, oh crap, well, we spent, 5% on ads this month. Okay, well, if next, we need to grow, maybe we can bring that up like to 7 or 8%, and that's going to bring us more money. Or we're spending money here, we're not using this clearly. So in terms of somebody, let's say, who doesn't understand P&L and basically just has been running and just doesn't even know, they do their taxes once a year and they kind of get the margin at that point, what do you do for those people?
Yeah, so we got to remember something. I designed this business for me. I didn't understand that P&L. Now, I have a gift for everybody. Okay. So at fullyaccountable.com/ecom leaders, you can go there and get access to 2 of our best-selling books. One of them is called False Profits. It's a book I wrote about the journey of building Fully Accountable. And why I'm telling you that is, 1, go get all those resources. I'm giving you everything you need to actually be successful at building your own back office. And to the extent you don't want to go build it, you pay us, a company like us, for expertise and resources. If you want to go do it yourself. And I'll give you every bit of the roadmap to go do it. But here's what you need. You need an interactive P&L. And what does that mean? The problem that we as small businesses have been sold by the free market is most tools are built for big businesses. And the small business has been designed to be a flow-through entity, meaning you and I as the taxpayer, we deal with taxes and we're designed to deal with us personally at the end of the year. Well, there's a layer of the business that needs to be run that has its own set of tax complexities before you even get to the personal taxpayer. But because we've been trained in this habit that it's all us at the end, we run it like it's all us at the end. And so the way I designed our company was to give me a real P&L every day. If I'm doing something with major transactions, I want to see my P&L real live now. Why would I want to wait minimum 45, 60, 90 days to find out I bled to death 45 days ago? And so I learned quickly that the P&L should tell a story, one, not only of just revenue coming the door, I should know my fluctuations on my cost of goods sold, my media. You know that in e-commerce, 42 cents of every dollar is spent either acquiring or reacquiring the customer. It's such an expensive category. We need to be monitoring and watching that every day. And so we have a report, depending on the frequency of transactions, that comes out for sure daily and weekly, that is always pushing into these benchmarks that sit along your P&L. And so the shame is the old accounting industry would just tie up your books for your quarter or for your taxes. The reality is it needs to be run like every other business and be closed out every month. But because we have so many high transactions, we should be looking at cash balance statements and merchant processing and inventory controls every day.
Beautiful. Okay, so a couple things to unpack there. The first one you mentioned, 42% of e-commerce sales is spent acquiring or reacquiring customer. Now, I know in Amazon, so just talking to a lot of people, the average ad spend, just advertising, is somewhere between like 1 or 2% extremely low, 5% is pretty low, and then kind of industry standard in Amazon is about 10 to 15 is on ads, pure ads. Now, in that 42%, what are we talking about? Like fulfillment, ads, like what is calculated?
So direct to your shopping cart versus a marketplace seller like Amazon. The one thing that's interesting and I know what I might have my own strange thoughts about
15% is Amazon fee. You can count that. I
Well,
guess.
that's what I was just going
Yeah.
to talk to you about, Aaron, is that in Amazon, the pay to play of having good SEO is I got to pay the house 15 points. And that's really a marketing cost. That's
Mhm.
not a fulfillment
Correct.
cost.
Correct.
And
Yep.
so everyone's acting like the 1% for ads. I'm 15% off the top, just
Mhm.
the right to have my ad optimized to hopefully get organic traffic and the right to go spend money on reviews and optimize the listing. I have probably a 20 to 25% real cost to be able to get organic traffic from Amazon.
Mm-mm. Okay. Okay. Yeah. So let's say Amazon, I would probably then put it, if you count that 15%, somewhere 30 to 40% is on the marketing. Which
Yeah,
that's real. So that's probably,
yeah.
it's less than probably the traditional e-commerce store, but okay. Good point.
Yeah, but then we make up for it in other areas. So it really rounds out, and I'll tell you in chapter 2 of the book, I call it Solving for X.
Mhm.
I double dog dare anyone to go read it. You're going to learn more about, as the CEO of your own company, how you would really have a relationship to acquisition costs and back into it, knowing that your type of business has an acceptable profit margin. So back to my health company, when I was doing 8%, I'm like, I just need to acquire more customers. But once I realized that the type of company I was running should have been doing 22%, all of a sudden I found I was losing 14% a month. I had an entirely different attitude about my P&L than I did about my razor thin margins of 8%. Sorry about the sun coming in
Yeah, yeah,
today.
it's all good. It's all good. A lot of people
Yeah.
will just be listening anyway. Okay,
Yeah.
so good. So now to continue the next
Yeah.
piece, right? When you mentioned, okay, the P&L daily, right? And how many do you work with any Amazon, like Amazon native brands currently with your company?
Yeah. Yeah. We have hundreds of Amazon market sellers in our client base.
Okay, awesome. So the Amazon payout, as you know, for most people is 14 days, right?
Yep.
And so when you're saying like P&L daily, I'm like, okay, great. I'd love to have a P&L daily, but probably realistically, the best sort of P&L that we would get is every 14 days. I'm assuming. And again, between when you go into different marketplaces and this and like, I don't know if
Yeah,
that
so
comes close.
what we
Can
would
you
be
talk about that?
managing, what we would want to manage for an exclusive marketplace seller would be things like making sure that we don't screw up anything on the FBA side, the inventory doesn't go out of stock, like certain things that would be a disaster on that end. As it relates to revenue, you're going to have to still play within the reality of whatever Amazon does there, right? That's just how it goes. Most of our clients, Amazon's a channel. It's not its only channel.
Okay. Yeah, and again, for let's say for us, so we do maybe probably I want to say 95% Amazon. So it's technically not the only channel, but really it is the only channel. Okay. So in terms of the P&L, right? Closing out monthly. Could you just give us a breakdown of the most important things? So I know some people don't do it monthly; they'll do it yearly, right? And I could give my opinions on how to manage that and what to look for, as a primarily Amazon focused seller. But maybe could you give me, like, having consulted guys who do sell on Amazon, let's say sell on their own store and e-commerce, what do you see is the biggest bleeding points for private label guys or even resellers, I guess, for anybody doing e-commerce?
For sure, it's two things. It's the cost of the product, right? The cost of goods, and it's also the loss of the customer, the re-engagement of somebody, not keeping them around, like either losing them in refund and breakage or losing them because they cycle out because of the lack of either the quality of your offer or the lack of meeting the basic conditions of what you promised them. So those are the two most expensive things that any product owner, especially Amazon product owners, other non-Amazon things would be the cost of your ads for acquiring the customer, would be the cost of your merchanting, the labor cost component with operating your business, whether it's the fulfillment center, the operations, or even customer service. Those would be the key elements that we would continually monitor. And you have a benchmark. You should know where you sit against yourself and people that are positioned like you in your industry, and you monitor that. And so in any given time, maybe your product cost needs to come down a little bit because we look at product costs no different than we look at insurance vendors or anybody else. You should always be maturing your supply chain. You should always be working at anything from ingredient or product costs. It's actually always going to be one of the most expensive things you deal with, especially in an Amazon business. And then literally the leaky bucket of customers. It blows my mind how many, I used to do this. I used to care more about my next customer than the one I have. It's more expensive to me to get a new one than it is to try to sell the one I currently have.
So then, wow. So there's a lot of pieces there. So first, right, on Amazon, it's not as easy maybe to get back to your customer. And before I'm going to forget this if I don't say it now. So in terms of the merchant fees, I want to make sure we cover some secrets on, do you know how we can reduce the merchant fee? Like, let's say Stripe or Shopify, like can that even be negotiated? Postage costs, like some of these e-commerce heavy activities.
All right, well, I'm going to stop you right there in that one. I'm going to let you know that most people think that the retail services like Stripe and our friends like Stripe, everyone believes because they're so easy to set up that they're a better alternative. If you're doing any volume at all, those are awful alternatives for you. They're the most expensive. Now, they'll tell you a rate that you think looks good, but once we gross up your merchant accounts and show you all your built-in fees, it's some of the most expensive retail merchanting available to you. There's so many better options.
As president of Stripe, like it's 2.7 plus like a cents or something like that. I think that's their charge. Shopify, I think, is like 2.7. And then if you go to Shopify, the highest plan is like 2.3. Shopify, I mean, I don't think, can you do a different payment than Shopify? I don't even know how that works. Maybe you can.
Of course you can. Sure. You don't need to use Shopify as your checkout cart. Most of our clients, once they realize how merchanting fees are built into the transactional costs, most of people don't even know how to gross up their merchant accounts to see all their hidden transactional costs. You know, the average Stripe person is paying 4%, not 2.2.
Is that because it's the 30 cents per transaction or something like that?
Yeah, there's more than just those transactional costs.
Oh, okay.
There's an interchange cost built into your mids. We show a new client, one, Stripe and those retail solutions don't like volume. So you're at the risk of their volume. Two, their built-in costs are far more expensive than working directly with a merchant bank to provide a solution for you.
So let's say for a Shopify store, what would you say is your number one recommended like solution to switch over from, let's say, the Shopify processing, and how do we switch it over? I would love to switch mine over. I don't do a crazy amount on Shopify, somewhere between $500 to $1,500 a day, depending on the day. It's really a small portion of our business, but I mean, you know, saving a couple points on that wouldn't be too sad.
All right, I'm going to give you something that I came up with a couple years ago, and it's called the 5x5x5 formula. You know how many of our buddies, Aaron, sit around and say, I'm going to triple my business. I'm going to go from 5 million, or I'll 10x it. I'm going to go to 50 million next year. You know, if you actually literally want to double your profit margin, follow this formula. Cut 5% of your direct expenses, cut 5% of your indirect expenses, and then after you've done that, go add 5% more additional revenue and you'll double your profit margin.
Because that would be assuming a profit margin of where? Like, let's say 15% profit margin and you just made 50.
I'll get you to 28 to 30% right after doing that. Exactly correct.
Right. Wow.
And so, so many people are so worried about this like 5X thing to their business. Unicorns are unicorns for a reason. But the real metric of business is to have a 2 or 3X growth stretch goal. And what things can you do in there to win margin continually back? You know, the world's changed. What you and I used to have to do to beg people to buy off online from us has changed. We should no longer look to just break even on customer acquisition stuff. Right now with direct to consumer, we should be thriving in margin because the consumer has now been trained to buy online. So the habits that we've cultivated for years to sell online massively need to change towards from bottom line razor thin margins to a profit margin that's acceptable to in the marketplace already.
So then, okay, perfect. So then what about for Shopify, what do you think of the merchant account? Save 2 points, 3 points there, even 1 point. Is there like a solution that, you know, a vetted solution of like moving over then from Shopify Payments to something else?
I mean, you can hit us up at wecare@fullyaccountable.com if you're someone who's got a unique set of facts, and we'll get you. We have a handful of people we love working with. We have a handful more that like people work with that we might know, or like there is more than one option in the marketplace. We don't have one, so we don't have a horse in the race at this point, but there are good providers out there.
Okay, great. So yeah, guys, we care at
fullyaccountable.com.
fullyaccountable.com. Okay, good. So I'll put it on the notes. Yeah, because I'm gonna have my team write to you. You know what I'm saying?
Yeah.
Because I want to see when we save anything.
And
I
then
mean,
some of the changes if someone's a US based or Canadian based company and where they are located, because that has some other complexities to the type of corporation you are and what bank's going to underwrite you. But assuming those facts are vetted out, and those aren't that hard to deal with,
no.
there are way better solutions than retail. Retail processing solutions were designed for low volume clients, not high volume clients.
Okay, good. Perfect. Okay, so that's great. And then, okay, so what do you see the biggest mistakes in the e-commerce guys? I think we went over that, which was the cost of goods. And then in reducing cost of goods, clearly if you raise your price and that percentage goes down, what other things do you recommend people, like how to cut cost of their goods?
Yeah, so I would continually be negotiating with my supply chain like I would any other cost that I have in my company, like insurance or anything else. The more you mature as a company and you prove to the vendors that you work with that you're stable and you're around, they want to do business with you. So you will have more negotiating power to improve your costs. Like the problem is so many guys and gals want to go for those cost savings in the beginning when they're immature and volatile and more risky. But as you mature, that's the greatest time to go back and see appropriate discounts along all categories of your supply chain.
So, okay. So, and again, a lot of guys that are selling on Amazon, we have, say China products.
Drop shippers or whatever. Yeah.
Yeah, whatever it is. Okay, a spatula or like a pen or whatever. Yeah. So coming from, China, now in your service that you offer, do you have people, let's say, negotiate on behalf of sellers, or do you just?
No. We actually help. So what the beautiful part of a finance team is, like, all I needed and what I really desire out of a CFO for me is to show me the information. I was just blind. They would have an opinion plus show me the information and have a strong opinion and push back against some of my gross revenue thoughts. I didn't need them to step in to do certain things I was capable of doing. I was just blind. And once they opened up my eyes and aptitude to it, I can go back and negotiate with my vendor.
Okay, good. Perfect. So let's take a person and they have, let's say, a 10%, a 15% profit margin in their business. They just found out, okay, they close the books in January one time a year, and they go, oh crap, like how the hell did we have such a low profit margin? And maybe they don't understand the P&L. So again, I think there's two customers: a person who already knows and understands P&L, and then like maybe insights for them, and then the person who maybe doesn't look at their P&L, doesn't know finances too much, and kind of just a little blind, like you were saying. So I would like to go over those two scenarios. Like the person just closed out the year, they know very little. What would that CFO do? Someone goes right now and says, hey, I wanna hire you guys. Come on. And of course, you said you guys take 1 million or 7 figures of revenue would be the minimum. So they're doing a couple mil. And what do you do for that person who's like kind of oblivious in terms of finances?
If they're oblivious, believe it or not, and if you're listening, I don't want you to shut down. The reality is every day we will take on a 7 or 8 figure business that literally, we know 3 things. 1, your books are a mess. You probably don't have any, or you hired this nice lady we call Mary, who your business has outgrown her abilities. You may or may not be tax compliant, and you're not sure any given day how much money you have in your bank. We know these are true. Some wonderfully good, mature businesses with a bunch of customers, owners are just like that. What we do is come in and right the ship, get it going, working correctly so that we can produce you the information you need. So we put the system and the structure in place and create some maturity to the business. Back on that gift thing I said earlier on fullyaccountable.com/ecom leaders. When I was maturing in business, I wrote a book called The CEO's Mindset. The first thing that has to mature is you, the leader. The habits that you created to drag your company into late 6 figures and into 7 figures are not the same habits you need to mature a 7 into 8 figure business. You need to work at people and process far more than you do offer. And the reality is that's a really hard habit to change. And maturing the back part of your business is part of the journey of what a 7 and 8 figure business needs to go through. So I don't want you to be diminished. You're not alone. Trust me, every day we're onboarding a company that has that issue. We want to help. Don't just try to clean it up. We'll do it with you. It's a reality. But that person needs to understand the maturing of their business, because what's happening first and foremost with that person is they're wasting so much expense that otherwise could be handled properly in the business to really improve their tax position. And then they're wasting so much expense because they don't realize where they're blowing their money in this leaky bucket.
Okay, great. Okay, good. And so then, does that include, okay, so you review the stuff and you go, hey, here's a P&L. I'm assuming someone goes over like, these are what all these line items are. This is probably the change, like the delta you had. This is what you did in, June versus what you did in July. And do you go over those things so that person becomes also proficient themselves without needing hand-holding?
Yeah. So, remember the role of a finance team run correctly is to do the job. We're not, ultimately, as a CEO of our company or any company I would operate, I'm not looking to be the finance guy, but I need the information, right? So you're hiring a firm like ours to do that work and assume the role of that department. Ultimately, our job is to not get you finally equipped in that. We're freeing you up to do the things you should be doing in your company. But at the end of the day, if a properly run finance and accounting department should be doing things like operational budgets, projections. It should give you all of the accurate information so that you can run your company not only well at its level, but ultimately double and triple it and double and triple the profit margin.
Okay, beautiful. Okay, great. And you mentioned something like, okay, you had this Mary, this kind of a Mary bookkeeper,
love Mary,
right?
She exists.
Okay, so she's great. There's lots of great Marys out there.
That's right.
Now, we had a huge problem starting off. Okay, this was probably the first year, second year, I think third, and I think by the fourth year we had a good person. But we had cycled through a bookkeeper every year, and it had been terrible. And also accounting, like we had cycled through every year. We basically was a different person because we were never happy. And do you guys also like help with the bookkeeping side at all? Or
we do the whole thing, Aaron. We run the whole show, right? So we'll come in and assume a role. If we're only going to have one of the roles, we would come in as the fractional CFO only. We call that your executive, where you can rent one of our CFOs. But in reality, we actually maintain all 4 positions: the bookkeeper, the accountant, the data analyst, and the CFO. We run an entire solution. We're not just telling somebody what to do. We actually do the work.
Interesting. So accounting. So you guys file tax returns, do the whole deal.
We do the whole thing. Yep.
Oh, interesting. So it's not just the CFO. It's anything finance.
We run the whole show.
Do the whole thing.
No, we do the whole thing. Like that's why I say we set out to solve a problem in this industry. We run the whole show. And as a business matures, Mary is a kind lady, but she's not capable of doing gross up of merchant accounts and this operational projections on their budgets and how to actually do lead scoring and benchmarking. Those are things that the low dollar bookkeeper never signed up for or has any of the resources to do.
What is grossing up the merchant account? That means like finding out the little things and changing it?
Yeah. So when you get your merchant account, it's a netted merchant account. And so everybody, I don't care who you are, if you accept a credit card and you're not grossing up your merchant accounts, then don't do anything else until you heard this and go get your person to gross up your merchant accounts.
What is gross up?
I add back all the expenses that have been netted out of your statement.
Okay.
That's what grossing up means. Go ahead and add it back and then show you your real cost of merchanting.
Okay.
What everyone else does now is they net it like they would an affiliate commission or the payment they get from Amazon. They just net it. They say, well, that's the amount we got. You gross them up and then pull the fees back out. So do you see what you're really paying for that service?
Interesting. Oh, wow. Okay. Good. Yeah. I don't think we do that. I think we just get the deposit.
No, listen, Aaron, nobody does. When they
we do it for Amazon. We do it for Amazon. We use this thing called Link My Books.
Link your book. Yep.
Yeah. And it's a great solution. We like it a lot because it does a P&L thing. Do you guys have an in-house software, or do you partner up with somebody to do that kind of like Amazon statement to P&L kind of transition?
We built our own software called Your Back Office
Okay.
that sits, it's called YBO, but it's an internal item, meaning it's an enterprise piece of software that sits on top of QuickBooks that we use as a way to be better at what we do in our job and to deliver those financial statements, management reports, and grossed up invoices and statements.
Okay, good. Perfect. Good. And then, okay, so then for the other person, let's say, okay, like me, okay, I have
Yeah.
a decent understanding of,
Yeah.
the P&L, what are the different items, even in the finance side, right? Like the tax returns, some of that whole activity. Like I wouldn't say I'm an expert, but I know enough to make some pretty decent decisions.
Yeah.
So let's say I said, okay, well, we don't have a CFO. Okay, so I go to you and I'm like, hey, well, what could you offer me? And what kind of things you do for a company like our company?
Yeah. So you think about a CFO, if they're positioned correctly, they're an executive on your executive team. And a lot of mutual clients and friends, the executive team runs real short after the CEO and founders. It gets like pretty scarce. There's not that many people there. And so you're renting the mind of an expert who's a financial expert who will act as a compatriot, being an executive on your team, not just being your yes man or yes woman. They're actually helping to run at a high level the company. And so CFOs don't do accounting, bookkeeping, and data analyst work. People on their team do. And so the reality is we built a team around that person. But what you want a CFO to do is, like, when you say, I'm going to grow 5 times next year, like, cool, your current P&L shows that you're doing this. How do you expect to get there? You're like, because I said so. Cool. Well, I don't see a strategy how you're going to get there. You want a CFO who's actually being a real executive on your team. Real executives speak direct, honest, and we believe that a standard of criticism is necessary to really grow a company.
Mm-hmm, mm-hmm. Yeah, exactly. So, for example, if it's Amazon, if you have, let's say, your COGS are 20%, and you want to triple, if you're going to, which I mean, tripling is not out of the question in the Amazon space or in physical products. But the question is, okay, so your COGS, let's say you're at 10 mil right now, COGS were 2 million. You're going to triple. You're going to go to 30 million. Your COGS will be 6 million. Okay, so you're the first quarter you're going to sell 3 million. Right now your inventory is at 500,000. You don't have money in the bank. What are you going to do? Okay, well, you need to find the loan. Well, here's the loan. Like, you need to think through the COGS.
That's right. And so we would put together a projection and an operational budget and say, okay, here's how you're going to get to a run rate at the end of the year here. But if every month and then every 90 days you aren't hitting certain milestones, you're never going to get there.
Right. Good deal. Good.
And so the higher up, so the problem in our space as people who are buying a service for accountants and CFOs, people call themselves one thing and they're actually, there's a lot of bookkeepers out there trying to act like an accountant or controller. And there's a lot of accountants or controllers trying to act like a CFO. Those are all different things. They're not the same thing. Someone who's good at accounting wants compliance. They want to organize things. They don't really think like an executive or talk about risk or deployment or growth. They just want everything to balance. And that person has an important job. None of our controllers or accountants play CFO and vice versa.
Okay, yeah. So you want to go over through those roles? Like, what in your opinion, what are each of those roles, and what should they or what are they responsible for?
A CFO, it took me a long time to learn this. I'd go hire a sharp CPA who had a degree, and I'd pay him 150, 200 grand to join my team. And I didn't realize that he wasn't going to do the accounting and the bookkeeping and the data analyst work. I was looking at all what I consider production work and expecting my executive to do it. A CFO is someone who's supposed to be sitting at my boardroom table, my management table, helping operate the company. And they're just a financial expert. Who's on their team is the data analyst. And if you have a lot of transactions, your data analyst is producing the information that is necessary to make those real-time decisions. Your bookkeeper is the data entry person who's doing the production work. And your accountant is the one who's making sure it's all right, in the right categories, under the right thing to maximize for closing out the month, as well as maximizing what you got to give back to Uncle Sam.
Okay, perfect. Great. Great. And then one thing, at the board, right? You have the board and you have the CFO. Now the CFO, let's say, what do you hire out like at a minimum, let's say weekly? like 5 hours a week, 10 hours a week, like 20 hours a week? Like, I'm
So the
assuming.
way we designed our model a little differently. You don't buy hours,
Okay.
you buy packages.
Okay.
And so, we at a minimum, someone's got a once a week call with their CFO, but the package is designed around the company's needs. And those packages are easy to see the framework of those right at fullyaccountable.com. But we decided to change the way the industry does it. We don't bill by the hour. We
Okay.
set
Okay.
up
Good.
packages.
I think that's totally fine. I'm game with that concept. So the main idea is, I'm thinking, the CFO, how much are they going to know of the business if you're going to bring them on and they're not, let's say, full-time with our company? Let's say you have a certain limited number of these guys available, and maybe,
Hours, right?
yeah, let's say you have 10 of them in your firm, or maybe 20 or whatever it is, and that person's going to take a fraction of their time, literally a fraction of their time
That's right.
in our company. How is it that person's going to know about our company? What kind of briefings do they get?
Two things, Aaron, two things. One is, we only live in this space. So the mistake a lot of service firms work is they try to work across too many industries. We only live here. So all of our clients are here. So 80% of whatever is happening in terminology is happening in everybody's company.
Mm-hmm.
Secondly, this person's a
And
financial
here meaning
expert.
what, e-commerce? Is that what you mean?
Yeah.
Okay.
Where we live. We don't live in real estate or other stuff. We live here. This is where we live. So I train, and our team trains our people only on this industry. So substantively, this is where we live. Two, and most importantly, they're financial experts. So if their team is producing the reporting necessary, you want them to understand the math of your business. And the reality is, when run correctly, that's what every finance department should do. So we're the most equipped on your executive team, not the least. You'll probably find out that your fractional CMO or your part-time customer service person knows less than your fractional CFO.
Good. Excellent. Awesome. Now, how about, can you tell me like a couple of stories? What kind of changes have you had, and if you could focus to some degree on any Amazon specific insights where you've come on and made a difference for a company, just to get an idea of, like, let's say someone did go to you, like, or let's say us, like, what is it that you routinely see in your business?
I tell you, as soon as we give you visibility to your P&L, the leaky bucket, the categories are labor and cost of goods as it relates to Amazon, and those built-in costs you aren't aware of. By fixing those, Aaron, we have hundreds of stories of helping people double their profit margin. It's our mission, by the way, to double the profit margin of 10,000 companies. And we're on our way. I don't know if we're well on our way, but we're on our way. And hopefully we're helping to double profit margin of companies that we're not even working with, who take advantage of our resources.
Okay, awesome. Good deal. Great. And then, I mean, I've covered a lot of the questions that I wanted to ask. Is there anything specific that you feel that people should definitely take on? Like right now, let's say they weren't gonna, let's say, hire your firm or your team. Yep. What should people be doing right now in terms of a finance standpoint in their companies?
I appreciate technology, automation. I'm afraid that it's oversold and people rely on dashboards. Software still have to talk to each other. And I would encourage you to have someone on your team who's looking at all of the moving parts and producing some type of report along with questions and criticisms, so that people can really look at real information so they can make better decisions. Awesome.
Good deal. Yeah, I definitely think that meeting and looking at reports. I mean, first you need to have reports. If you don't have reports,
That's right.
I mean,
yeah,
you're a
two-part equation. That's right.
But looking at them, for me, it's like, okay, look at the report. What do we need to work on? And that definitely gives a great idea.
And people can do this. It usually comes down to a function of time, right? So, where are you going to invest your time? And so with only so much time in the day, I think well-intentioned leaders want to do these things. You just run out of time and they work on something else.
I know, but also I think people run out of time doing things that are not important. I mean, there's so much wasted time in a day. Like the I don't have time, to me, is somewhat of a myth, because, okay, you don't have time, but how much time do you spend on Facebook? How much time did you spend watching TV? How much time?
No, I'm with you, man, but I'm just saying, like, what happens under the need category.
There's no time.
Well, the need category of accounting falls right at the bottom. People treat it like bottom line bookkeeping and reconciling, when in reality, it's one of the probably biggest profit centers to how to really improve your company. But most people who run these types of companies that you and I are, we're marketers, we're product developers. And so as a result of that, we don't have the mindset to think financially. So that language around finance is diminishing, or it's overwhelming, or it's intimidating. So we'd rather just go focus on getting more sales or another product. So we just don't invest the time. And so that person needs somebody investing the time to produce those reports. And that mindset change happens for you and I. And if it doesn't happen for you and I, then what we do is complain that the automation doesn't solve a problem that otherwise is never going to get solved.
Yeah. And then just as a final note, and I think a lot of my listeners already know this, but we have created a software. It's called Samurai Seller, and it's because 3 years ago, our company almost went bankrupt because I wasn't keeping track of the profit at all. I mean, I was so far in this like left side of like, I know nothing about, I didn't know what a P&L was. I'd never even like done one. I hadn't even like, for a while, I ran the company without even an EIN, without a bank account. I mean, nothing. Right. And so
I did the same thing.
Yeah. When I looked at the numbers and I go, we're literally not making money. I'm working, doing all this crazy stuff, making less money than I was making when I had a job. And I'll tell
you a fun story, real quick story before we leave. So I was walking up on stage in 2012 at this large event called Traffic and Conversions, and I had won an award for Marketer of the Year. And on my way up to Ryan's stage, I leaned over to my business partner. I said, wouldn't it be hilarious if this audience knew when we were half of our size, we were more profitable?
Wow. And it's crazy. And I guess at that point, as you're saying, you weren't looking at it. I went through the same experience. Where I was not looking at it. I'm like, whoa, I quit my job, did all this stuff. And then when I look at the numbers, I go, I'm screwed. And so anyway, we did make a software for Amazon guys specifically, Samurai Seller. We have all the stuff. We put in all different accounts. And that's the most P&L daily that I've ever found, because it takes into account the cost of goods sold, takes into account all your costs, warehouse, employees, whatever it is, and you put it in, and every day you can get it.
That's awesome. So I would say that somebody should be running that tool, and they should have somebody on their team, whether they're on their team outsourced or internally, who's dedicated to helping use that tool to make things better at the company.
Yeah, I agree. And anyway, that's what we do. Okay, good.
There you go, buddy.
Awesome, Vinnie. Thanks so much for coming on the show. It's been great having you. Fractional CFO. We're still CFO-less. So, hey, we might talk a little bit later, see, what the deal is. I'm interested, right, to see like.
Yeah, good. You should take a look. I encourage everyone to go through the process of an onboarding. So one can see how a company does that. Two, you can learn more about what's missing and needs in your company. Like you said, we shouldn't work with everybody, but everybody should be struggling with maturing their finance department.
I agree. Awesome, man. Thank you.
All right, buddy. See you, pal.